Good afternoon and welcome to the LPA Group plc investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Philo Daniel Tran, CEO. Good afternoon.
Thank you. Good afternoon, everybody, and welcome to our presentation. I'm Philo Daniel. I joined the company in January last year, and we've been making some tremendous progress in the meantime. Just my background, I joined from Smiths Detection, which is part of the Smiths Group, and prior to that, I worked for Thales. So come from top-tier companies with experience across all of the market segments that LPA currently operate in. With a strong strategy, product development, and product rationalization background. With that, I'll hand over to Stuart.
Good afternoon, everyone. My name is Stuart Stanyard. I'm the CFO. I've been with LPA 3 years now. My main background is through Pricewaterhouse. I've worked in Hong Kong and the UK, and then 21 years with Rolls-Royce in civil aerospace.
I'd also just like to add that we have Stuart and I are supported by a very strong non-executive board members as well, who bring a lot of wealth of knowledge to the company and support us as we go through our diversification and growth strategy. Thank you, Stuart. So just for those who are new to LPA, who are we? We are an innovation-led company that design and manufacture products. We have solutions that we offer our end market segments, products and service and sustainment products as well. We are in the solutions. We're known for our jumper cables in rail, our electronics and lighting, as well as our weight and space saving products and solutions, particularly in the aerospace and defense, but as well as in the rail segment. In the product range, we have our oldest knife fan connector. We've also got a range of our aviation ground power units that we make in-house, as well as our power converters as well. And these products and solutions can also be sold as solutions. In terms of service, a lot of our products have a very long life cycle span, but the platforms that they're integrated into have a longer lifespan as well. So we do provide sustainment products. We do provide spares and repairs as well to our customer. So LPA, we're based across 4 sites, 2 large manufacturing sites, and we have a presence mostly via distributors in our international markets, where we also go directly as well. And we are supported by a German business development manager who supports the German-speaking market as well as Eastern Europe. And we support the global market from our UK manufacturing sites as well. And whilst we say over 50 countries, it varies. In aviation, we are servicing more than 70 countries. In rail, it's over 40 countries. And we would like to see that the defense and aerospace, whilst it's primarily UK, will move towards supporting some of the other international markets as well. So talk about global customers. We have a very enviable list of global customers that we work with. You're all familiar with a number of these, I'm sure. We have the train manufacturers such as Siemens and Alstom and Hitachi. We've also got operators such as TfL and NS, which are the Netherlands operators that we've signed on recently, and we expect to get further contracts from them. We also work a lot with solution providers such as Grammer or Compenfenza, who make seats, and we provide the lighting electronics for that. Boda, that do the door electronics for them, which then gets integrated into the manufacturers' platforms such as Siemens and Alstom, which then get run by SNCF for Transport for London. I also want to draw your attention to aerospace and defense customers. I did speak a little bit about it last time, but just want to reiterate that they are still interesting and exciting areas for us to focus on, particularly for the commercial aerospace market, which is a huge manufacturing leader globally, the UK being a leader in that globally. And we are part of a lot of the journeys of these new platforms coming into the global market. And I'll speak about it a little bit further on. So key highlights from recently. I haven't changed this slide, but I'd just like to give you an update on where we're at with that journey. So I spoke about, the focus was the one LPA was really about integrating into a functionally based organization. And what that has done is it's promoted innovation, it's promoted collaboration, and really operational efficiencies across the business. And what we are working on now is really about harmonizing the processes, given that we have 4 different processes against each of the functions. It's really about rationalizing those, harmonizing it to give us those efficiencies as we move forward. I spoke about the manufacturing site optimization. We did sell one of our sites and integrate that into one of our larger sites. That's fully integrated now, and we've been running optimally and effectively for the last period of last 2 quarters already. Customer-centric innovation, I will speak about that shortly. In terms of rebalancing the business, that is also, I have a slide on that as well, in terms of long-term programs versus shorter cycle wins, which I'll touch on in the next slide. New distributors and legacy distributors. So we are really looking at who is effective as an extension of our sales organization, who are good ambassadors of LPA globally. We are continuously looking at that list, adding new and removing a few, and you'll see some changes perhaps next time I speak with you, which I'll be able to give you some more information on that. And in terms of certifications, we've always spoken about the fact that there is a right to play in some of these markets that we're in. It's just not for everybody. And we continue to maintain and sustain our existing certifications, but we are also working on developing new products with new certifications as we look to expand into defense. And these include MIL standard and DEF standards that will give us an opportunity to start selling our organic products into the defense market, which then we could potentially export as well. And finally, in terms of refinancing, was there anything you wanted to add on that, Stuart?
No, Phil, I think, as we mentioned last time, we concluded this in January, just before our prelims, and we've been working through that, and it's working very well, as I'll show shortly.
Okay, so I said, revenue balance. We've constantly had issues where we've had large contracts slipping to the right and nothing to fill the funnel for us to continue delivering. That doesn't mean that the large orders haven't been slipping. They are. You might have, if you had a chance to look at my statement this morning. But we have a lot of smaller orders that will help us balance it, and we still will continue to deliver and should be able to deliver on our commitments. And these are just a number of, the last time I showed it, it was from the beginning of the fiscal year. But now I just wanted to show, since what we spoke last time, for 2026, these are the contract wins and orders. So they're small numbers, we haven't announced anything, but we're still quite confident that we will get our targets for order entry for this year. So we should hopefully have some announcements coming through in the next quarter.
Okay, thank you, Philo. Moving on to some numbers. So I'm delighted to report that our headline revenue is up 45% relative to the first half of 2025. That's in line with what we're projecting. That has resulted in a higher gross profit of 28.7%. That was 22% at the end of last year, and has driven down then to a positive adjusted EBITDA. And delighted to report that for the first time in 4 or 5 years, we've got a profit for the half year of 0.4 million, which is great, which in turn delivers a profit per share. Looking at the order book and the order entry, order book still, I've got the chart later, but still stays pretty steady around 30 million. Order entry is down on the first half of last year. That's because rail is pretty cyclical, and we got quite a lot last year. And as Philo's mentioned, we're looking that will improve in the second half of the year. Moving to a bit more of a deep dive on the revenue. You can see on the left-hand chart here that rail is a higher proportion. This time it's 69 as opposed to 64%, as more and more projects are coming through. The key thing we split this time, we split up aviation and aerospace and defence on the revenue side of there. As Philo's discussed before, those are areas which we're trying to focus and diversify in. The percentages are down because the value of the pie is up at 13.5 million as opposed to 9.5 last time. By segment revenue, no significant change between lighting and electrical and electromechanical. Big change here is that value distribution has moved up to 28%, and that's primarily through the aerospace and defence there, which I mentioned on this time is actually up 20% half year on half year, the aerospace and defence revenue. By market, the exports remain pretty solid at 39%. Looking at the order book, as I mentioned, it's pretty strong, still around 30 million. Most of it exists in lighting electronics through the rail projects, and there is quite a strong tail moving through to FY29. 41% of the order book currently relates to FY26, which means we've got circa 90% of things booked to deliver for the rest of the year, this financial year. Looking at the balance sheet, key items to pick out here, no change in the intangibles. Tangible fixed assets, we have 2 freehold properties which are worth more than 5 million. They're at a net book value of about 3.6. The pension defined benefit remains a strong asset on the balance sheet there. As we've previously discussed, the legislation is currently going through Parliament to enable companies to release some of that surplus, which we would intend to do in a couple of years. Moving to the key movement there, the net working capital there has gone up significantly. The reason we did the refinancing back in January was to give us more space to be able to grow the business. So we've put a 45% growth on the revenue. That in turn has increased debtors, plus the fact some key customers year ends are at March, which makes it a bit sticky for receipts for us. And we've moved a lot closer to putting our creditors back on terms than where we were. So that's the main reason, the net working capital. The gross debt is pulling down from our refunding there. So looking at the cash flow, half year to half year is actually a 3 million cash flow in. That's primarily come through operating cash flow from making a profit this year and the net refinancing. And as I talked about on the earlier chart, that's gone on the change in the working capital. As we progress through this year, we do expect the working capital to back off a little bit, and the net debt will go down as a result. The investing activity was the final payment of our Redbox acquisition that we made in January 2024. So that's all been fully paid for now. I think that's over to you then, Philo. Yeah?
Okay. Thanks, Stuart.
Oh, no, it's not. Forgot my last chart. Apologies. Right. So just to recap, order intake is 10. We expect that to get better in the second half of the year. Order book remains about 30, is high. Very strong revenue. Very pleasing gross profit of 28.7. The positive adjusted EBITDA. And then the cash generated from operations, the impact of that is from the working capital. And that is my last chart. I'll pass on to you, Philo.
Okay. All right. So in terms of strategy, we continue to focus on 3 pillars. We have growth, delivery, and our people. So in terms of what have we been doing, last year it was all about consolidation, reorganization, restructuring, identifying gaps in the organization for the newly functionally oriented organization, which we've been looking at filling and continue to sort of ensure that we have the right capability to deliver our current customers as well as our future ambitions for growth. This year, the focus is all about delivering, whilst we also continue to strengthen the organization and develop new products and new innovation, which I'm going to talk to you about very shortly. And next year, the focus will be more on M&A and what do we do to continue to grow and get the economies of scale. So very exciting times. And I'd like to talk to you a little bit more about not what's happening in the future, but what we're currently doing in terms of shaping this business. So case studies. Today I've got 2 case studies, both non-rail case studies, which I think is quite exciting. The first is new market entry, not just for us, but also for our customers. So this was a journey that started over 5 years ago when there was just a handful of people that started the discussions on this electric vertical takeoff and landing platform. We have been part of that journey. And what is our USP? It is about that support to the design team for weight and space saving capability. We've already been part of the prototype, which has been successful. We're expecting orders to do with the certification aircraft very soon. And once those certification aircraft, if they pass the certification and they get certified, and our design is embedded as part of that platform, that should be recurring revenue for tens of hundreds of aircraft on a yearly basis from next year onwards, or the year after, 2028, I would say. So it's a fantastic story here, and we are part of that journey. We have been for over 5 years, so we will continue to remain that way. The next case study is similar to one that I've shared with you previously. This is for a large UK airport where we are the incumbents, and we have the opportunity of more than 70 crocodile cable carrier systems. Why us? Because we have listened to the customer, we've worked with the customer, we have the best lightweight, agile solution globally. It's corrosion resistant. It can be handled by just one operator for up to 4 power cables that go to the aircraft. So this particular contract would be deployed over a period of time, and it will have both a combination of dual as well as quad crocs available. So it's imminent. We don't have the contract yet, but I just wanted to share that it is actually a really exciting ability for us and to engage with customers and very quickly convert them into solutions for them, whilst the certification and the getting them into the market as a permanent solution takes time in this industry. But once we're there, it is a good recurring revenue for us as well. That brings me to new product introduction. I think I mentioned a lot about this is what we're going to do and this is where we're heading. But I just wanted to say it is not about what we are about to do. This is what we are doing and which products we are launching. So I'll start off with the one on the left, which is the automated charge level load bank. It's a proprietary system. We developed this because we needed to ship our products. This is the red boxes, safely needed to be discharged because they use lithium batteries for them to be transported. But once we developed it, or we were discussing developing it, our customers started expressing interest as well. So what started off as an internal need became very quickly a customer-based need as well. So this is essentially a pre-flight conditioning. It's streamlined, it's compact, and the beauty about this is this solution is only possible because we've had the mechanical part done from one design center and the electronics and software done in another design center to give us a combined product within months, essentially. So very exciting. The one in the middle is our cable carrying solution. I've just spoken to you about the case study earlier. What this is a little bit different. This is our modular architecture, which essentially simplifies shipping. We focused a lot on the local UK-based requirements for this particular solution, but there is such a demand for it internationally as well. And these things can be quite big and cumbersome. So we've developed this modular architecture which simplifies shipping, and it also makes the customer deployment and installation much simpler as well. And it's done both for the quad as well as the dual, so that it can actually satisfy a broad range of aircraft categories. And to the last, I would say, is our ruggedized overmold connector. This is our advanced connector system, essentially taking the baseline is the plain power connector, which we've then created a more ruggedized version for demanding defense and aviation environments. It's improved connector, durability, environmental sealing, and operational reliability as well. So very exciting, and you can see that all of these are released or will be released within the summer. So it's not for tomorrow, it's for today, and this should allow us to grow as well. The next slide is very much focused on rail, but I just wanted to showcase that this is using a DALI protocol, which is a digital addressable lighting interface, which is a dedicated protocol for digital lighting control. The first part is an advanced control-enabled power system for ground transportation. So all of this is for ground transportation because it's been primarily developed for our customers now. But this will also allow us to showcase it at Intertrans, which will be in September, one of the largest rail shows, to demonstrate our capability. So what this does is it provides a flexible lighting control and robust integration capabilities. The touch panel in the middle, it's really an integrated control and display system that has a GUI or a HMI that you can actually do lighting scene control for within a carriage or a compartment, and it supports multiple onboard monitoring and control functions. The very last one is the train seat reading light. It's essentially compact with an integrated power supply and touch control within a very small size, and it's developed for anti-glare and high use capability as well. So again, as you can see, a lot of these will be available either within the summer or just after. Really, in terms of what the team is doing, working, for example, the smart power supply was a collective designed by both our Martech acquisition team as well as our existing electronics team. So a lot more collaboration going on internally to drive innovation within our product roadmaps. Right, that brings me to the last of my slides. So I suppose in terms of we have continued to work on product, our people, to be able to deliver, and then to ensure that we have existing and new capability, that we stay ahead in terms of the USPs for our existing products, and we are able to develop the next generation of products as well. We continue to rebalance the books so that we are able to have a lot of the products I've just shared with you. The first slide in aviation is very much recurring revenue. The second slide I showed you was very much about the bigger programs, winning large contracts. So we'll continue to work on those. In terms of our solutions, in terms of the numbers, we are, whilst we already spoke about our order intake, whilst it's a little bit lower at the moment, we're quite comfortable and confident that we will meet the targets that we've set out to do this year. And the team will continue to work on that. And just to reiterate, in terms of certifications, we have a right to play in these markets because we have our certifications. The focus strategically is for us to go further into defense and aerospace, and we're already working on some really good collaborations with some significant players in the market, and we are developing new products with those required defense standards that we will comply to. And I'll talk about that and the products that we're developing for that defense market a little bit more next time I see you. So I think that's all we have for now. So thank you very much.
I'll please just ask you for a few closing comments.
Yeah, thank you. Well, I suppose, yeah, thank you for those who've stuck out with LPA for a very long time, waiting for the positive news that we've been able to share this morning. So I'm very pleased with the results. It has been a lot of good hard work from the team, and we will continue to do that and deliver on our results for full year. And I do welcome new investors on board as well. We have a very exciting journey ahead of us, and we are very, very, very keen to grow and drive further investment opportunities for all of you. So thank you very much for listening, and hopefully you come on board if you're not already.
Okay, thanks.
Thank you. Bye.
That's great. Thank you for updating investors today. Can I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This may only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team, we'd like to thank you for attending today's presentation, and good afternoon to you all.